Hey, it's Mac with PriceActionTradingSystem.com, and today is Tuesday. It's October 17th. This will be our chart lesson for the day, and it's going to be pretty quick again today. I mean, this has been a really tight range. It turned out to be two-tiered. Early this morning, it looked like it was really going to be nothing going on today, but we did at least drop down a measured distance, and you can see those are two equal sides, and so this is turns out to be a midline here. And it did come into play. And so just not a lot of entries today. um, and we are going to close higher once again, not by much. You can see where we closed yesterday, but looks like, well, I say we're going to close higher. We could back up in the next 10 minutes. There's about 10 minutes left in um, today's session, and so we could back up before it's over. Wouldn't surprise me if we came back to the EMA. Even if we close where we're at, we're not going to close up, but a few ticks at the most, point at the most maybe. But we'll see what happens. But we're just going sideways. We continue to make these new highs, and we might jump up a little bit, and then we go sideways. We jump up a little bit or back up a little bit, and then we go sideways. And but we're still almost we're more than halfway to the 2600 level now, where we were just trying to get through the 2500 just a week or so ago. So this market just continues marching onward, so to speak, and but the way it's doing it, even though we're making new highs, there's just not a lot of movement during the day, and it's hard to find any setups. And I don't, in case if you didn't hear it earlier, a couple of weeks ago, I read, I think it was the month of September. I'm sure October's not going to be any different, but September was the lowest record of volatility in the S&P or the ES in the history of the market. So that's pretty telling. Um, so I mean, this market's been here a while. We've gone through some slumps before, but you know, the biggest slump in the history of the market for that month, it was the lowest. Actually, it was the lowest September volatility in the history of the ES. That was the way it was worded. So I don't know if that means in really meant the history, but if I remember reading it right, I think it was the lowest volatility month ever in the ES. So I mean, generally you get those months. Generally, your fall, August, September, and October is when the market really takes off, and there's a little lull around the holidays, and another one during the summertime. But generally, by August, September, the market that's historically the some of the best times of the market, and we just we're not having that this fall. I mean, we're still making new highs, so that historically we're still kind of continuing to move forward and have a good month. But as far as day trading goes, there's not enough movement during the day really to have a lot of trades. But anyway, let's talk about them. There's not but a couple here. I've got a couple of green ones, and even them I'm leery of them. And there's a stipulation to them, but we'll talk about that. First trade I saw was right here, right before the regular open. Um, it's tempting to want to go short right here, coming down, but you don't have any room here. You just, it's obvious that's a very tight range, and you don't want to get stuck in this. So if you entered here, it probably would have worked out, but I just think it's too risky. The only way I would enter here, I guess I would be willing to mark. What time was this bar? I can't remember. That bar was just after the 7 o'clock hour, so um, I'm willing to make that one green. And saying if you could get in there, if it backs up enough, and it did back up, you probably could have got in all the way back to here. If that gives you enough room to get out before these lows here, then I'd consider it. But otherwise, you just got to skip that. This one, definitely not enough room. Even though it would have worked, there's not enough room there. It did go lower, but there's no guarantees that's going to happen, and I just think that's too risky going right at the EMA there like that. And look what happens. It does break lower and gives you a chance to get in at the very low on a second entry. Notice that new high, pull back first entry, pull back. So I like that one. Again, it didn't take off like I really thought it would. Um, so you could have gotten shaken out of this one. Um, when it comes back here again, if you could get in this, you can't go long right here, but if you could let it break higher and you drop a limit order, and you could have gotten filled all the way back to here, then maybe. I probably skip this one. When you get the failed second entry short, again, if you can get in with enough room to get out before here, then I'm okay with this one. You could look at the closes and judge it by that, but you still don't have enough room entering on a stop. So you'd have to let it break higher and drop a limit order in here. Um, so, um, and really on a day like this, as sideways and as tight as this is, I'm probably going to want out before the closes, because you see how many times we turn at those levels. Those closes are important areas, especially when it's this tight and this flat. I mean, it's obvious there's just not any room there. So you got to be real careful. You do get a short off the high, but again, that's too bullish. This is just an inside neutral bar. By the time you get a good bar, you got to enter way down here. Actually, if you could let it break lower and maybe enter back up here near the high, okay, but you don't get that. So you really just have to watch that one go without you. But you can treat this like a failed break lower, and this is very bullish down here, a long way away from the EMA. So I like this one because it's probably going to come back at least and test the breakout area, and it may come all the way back and test the high, which it ends up doing. So this turns out to be a nice trade, and that's really the trade of the day. Either that or this one here late in the afternoon. But then we're coming down, and again, you don't get a very good setup. It's just very neutral, and then you get a big bearish bar, and you don't want to go short right there. Even though now you realize the range is bigger, there's a possibility it's probably going to the other side, but entering right into that midline could harm you, because you see what happens if you tried to go long into it there. You got burned. So you want it to act like support or resistance, and if you're entering here and it acts as support, then you're in trouble. So you really can't enter without enough room. But look what happens. It pushes right on through like it's not there. It tests it once, pulls back, tests it twice, gives you a relatively bearish bar. If you can get in here again with room to get out before down here, then I'm good with this. And you could have, if you let it break lower, you drop a limit order, you could have gotten filled at least a tick back into that bar, and that gives you enough room to get out. And so your next opportunity is going to be looking to go long off these lows, and you get a higher low here, fairly bullish bar. You don't have a lot of room before that midline, so you got to be careful with that. You might let it break higher and drop a limit order in here, but the odds are if it gets through here, it's probably headed to the upper side, because now this is the lows and this is the highs, and that's generally what it's going to do, is work from side to side. And so we're looking for prices to come back up here, although you got to be careful of this midline going long into it. You need to have a little room there. Okay, I had a slight interruption there, but we're wrapping it up pretty much. But really, just remember, the keys to entering on range days is to try to go short off the highs and long off the lows. That's really the only way to trade this. In the middle can be a lot, not nearly as predictable as it can. Your best entries are going to be off the lows and off the highs. Occasionally, this was a pretty good short setup here, because it came back and tested and acted as support twice. So, and gives you a pretty bearish bar. Only thing is you got to have room to get out, so you got to remember that. But for the most part, your best entries are going to be short off this point and long off this point. And you can see, even though I don't consider these good setups, if you'd have shorted off this line pretty much any time except this last one after 2 o'clock, you would have made money. And if you'd have bought off this low line anytime, you would have made money. So that's the keys to it. And if you'd have just sold and bought blindly, you could have sold once, twice, 3 times, and they would have all worked. You could have bought once, twice, 3, 4, 5, and they all would have worked. So just keep that in mind, and you can see that if you If you'd have sold that one blindly, you'd have got burned, but you're not going to want to do that. I mean, you really shouldn't buy or sell them blindly unless you really know what you're doing anyway. You want a good setup bar. So that's a mute point. And I'm just trying to point out how, you know, how the best setups are going to be selling off the highs and buying off the lows. And if you try to trade it any other way, if you try to trade the breakout, you can see here it would have failed. You'd have got burned. If you tried to sell here, of course you might have got a point or something out of either one of them. But if you try to sell here, you would have got burned. If you try to sell here, you would have got burned. Um, so, but that's what people do. That's if you read or study most trading strategies, they tell you to enter with a breakout. And I can tell you, you're going to lose that way 9 out of 10 times. The only way to trade this is to sell the highs and the failed breaks higher, and to buy the lows or the failed breaks lower. Didn't come out right. Is that right? Failed breaks lower. Failed breaks higher. There you go. I think that's the proper way to say that. Some of you English majors can correct me. So anyway, that's pretty much going to do it today. There's just not much else to say about it. Just remember, the keys are selling the highs and buying the lows on range days. If you just stick to that, you're going to be better off than most any other strategy. So, but I'm going to go ahead and wrap it up. We'll be back again to do it tomorrow. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.